You've probably heard that tariffs are back in the headlines. Maybe you've caught something about a 10% import tax or saw someone mention how it's going to shake up the economy. What does that actually mean for real estate? Especially if you're thinking about moving to the great state of Texas. Whether you're buying, selling, building, or investing in 2025, this really matters more than you might think. From construction costs to mortgage rates, tariffs have already affected how much you'll pay, how long things will take, and what kind of market we're stepping into this year. So today, I'm breaking down exactly how tariffs are influencing the housing market, from the materials that go into homes to the loans that help us buy them. Let's dive in. What are tariffs and why should you care about it in real estate? Let's start with the basics. A tariff is a tax on goods that come from outside of the country. Governments use them to protect domestic industries, but at the consumer level, especially with housing, they often lead to higher prices. So far in 2025, we've seen some major shifts in trade policy. On April the 5th, a universal 10% tariff went into effect on all imports. Just a few days later, on April 9th, the administration announced a 90-day pause on most elevated tariffs. Here's the catch: that pause doesn't apply to goods from China. Tariffs on Chinese imports jumped 125%, and those are already starting to ripple through supply chains. This policy shift has significant implications for the housing market, as many construction materials and home appliances are imported. The increased costs from tariffs can directly affect home prices and availability. Let's talk numbers. During the last round of lumber tariffs in 2018, the cost of building a single-family home went up by $9,000 to $16,000, according to the National Association of Home Builders. That was just from Canadian softwood tariffs. Fast forward to now, and we're facing broader, deeper tariffs that encompass a wider range of materials. Recent analysis indicate that construction costs could rise by approximately $17,000 to $22,000 per home, depending on the extent of the tariff applications. This estimated accounts for 5 to 6% increase in construction costs, as reported by Market Watch. On April the 10th this year, the tariffs impacted materials such as lumber, steel, and appliances, which are integral to home construction. These increased costs are anticipated to be passed on to the consumer, leading to higher home prices. Newsweek recently reported that over time, restricted supply from trading partners like Canada and China will raise prices on both lumber and other critical construction materials. That includes drywall, roofing, cabinetry, flooring, you name it. And when costs go up, builders either raise those prices, slow down projects, or cut corners on quality. For buyers, that could mean fewer options, higher price tags, and longer construction times. For renters, it could also mean delayed delivery of new multifamily developments, which could also push rents higher. Okay, so material costs are climbing. That's not the only thing getting more expensive. Tariffs also affect mortgage rates, and the connection there might surprise you. Let's break it down. As of April 14th of this year, the average 30-year fixed mortgage stands to be 6.98%, according to Mortgage News Daily. That reflects a slight decrease from earlier in the month, but remains elevated compared to historical averages and higher than where many hoped rates would be by now. The recent implementation of broad tariffs by this administration has introduced significant uncertainty into the economy. While tariffs often lead to higher prices for imported goods, contributing to inflation, they also slow economic growth by increasing costs for businesses and consumers. Federal Reserve Governor Christopher Waller addressed this recently, stating that if tariffs remain elevated, they could slow the economy significantly, raise unemployment, and even risk a recession. In that case, the Fed might be forced to cut interest rates to avoid a broader downturn, even if inflation stays above target. So what does this mean for buyers? If inflation wins out, mortgage rates could climb higher, potentially pushing past 7%. If economic slowdown becomes the dominant issue, rates could stabilize or even drop slightly. Either way, we're in a highly sensitive market where small policy changes can have a big effect on financing costs. And here's what it means in real estate numbers. Let's say you're buying a $400,000 home. A 1% increase in those rates could raise your monthly payments to over $200 per month, depending on your down payment and loan structure. Over the life of a 30-year loan, that's well over $90,000 in additional interest you'd be paying. This is why timing matters. If you're considering buying a home this year, working with a lender early, asking about rate locks, and staying informed about the tariff news could save you tens of thousands of dollars in the long run. That's the financial piece, but where is it hitting the hardest? Because not every market is impacted in the same way. Let's take a closer look at what's happening here in Texas and in other high-growth cities across the country. Tariffs don't just impact all housing markets equally. Cities with a heavy reliance on new construction like Austin, Dallas, Phoenix, and Atlanta, for example, are especially vulnerable. Builders in these areas depend on imported materials like lumber, steel, drywall, and appliances, which are now more expensive under the new trade policies. In Austin, builder costs are climbing and timelines are stretching. According to CBS Austin, tariffs could limit supply and drive prices higher across Central Texas, especially in fast-growing areas like Leander, Liberty Hill, and Kyle, Texas. Phoenix and Atlanta are facing similar pressure. As Realtor.com points out in their 2025 housing market outlook, cities where affordability was already tight could see buyers push even further out of reach as new construction costs continue to rise. This isn't just about buyers. Investors and developers are feeling the squeeze too. Projects that were already operating on thin margins may no longer pencil out. According to the National Association of Home Builders, tariffs on steel and essential goods for building a home are delayed or even canceled. Across the country, some analysts are also predicting a slower than usual spring as more buyers hesitate, especially with higher price points. Here in Texas, we may see something different. If builders scale back in response to rising costs, inventory could tighten even more. And that kind of squeeze creates a tricky dynamic. Fewer move-in ready homes, but also a window of opportunity for motivated buyers who are prepared, flexible, and ready to make a move quickly. Even if you're not buying a brand new home, you could still feel that ripple effect through higher rents, more expensive home renovations, or tighter resale inventory. Tariffs don't just raise the cost of everything, right? They shrink options for everyone. Really, the question most people really want answered is, what should I do right now? First off, don't panic. While these tariffs are already potentially in effect, the broader economic response is still unfolding. The housing market is one to be watched very closely. And so far, we're seeing a mix of short-term price jumps in materials, shifting mortgage rates, and growing hesitation from both buyers and builders. This is a moment to plan and not freeze. If you've been thinking about buying a house in 2025, I'd recommend, like I said earlier, talking to a lender right now. Rates have been moving around quite a bit, dipping into 6.64% early in April and then rising again. And it's very possible that inflation from these tariffs could keep mortgage rates elevated throughout the entire year. Time magazine recently broke this down in a great article that explains how tariffs are likely to put upward pressure on rates unless the Fed step in to offset the inflation. So don't wait to ask about rate locks or buy down strategies. Those could save you thousands of dollars over time in the life of your loan. Now, if you're considering a brand new construction home, this is especially important. You'll want to have clear conversations with the builder about their handling material cost increase and potential delays. Some builders will absorb those costs and others might make adjustments mid-contract or swap to lower cost materials. You'll want to go in with your eyes fully open. Here's a story. During the pandemic timeframe, we saw new clauses inside of builder contracts. All of them are proprietary and they're allowed to change them as they will. But we saw something called an escalation clause that was inserted into those contracts to account for those high material costs that the builder had to take on because of shortages. So be aware of that. Read those contracts carefully and make sure you fully understand what you're getting into. ABC News recently spoke with builders across the country who said they're already being forced to make tough decisions. adjusting timelines, swapping out materials, and in some cases, shelving projects altogether. And if you're a seller, here's what I would keep in mind. Buyers right now are cautious. Between inflation, higher rates, and general economic anxiety, they're watching every dollar. So if your home is sitting at the top of someone's budget range, even a small bump in mortgage rates could knock them off of their running. That's why pricing strategy and even offering closing credits can help your listing stand out. It doesn't mean that you're undervaluing your home. It means you're meeting the moment. We're in a moment what ABC News calls a moment of pause, and how we respond right now really does matter. That doesn't mean the sky is falling. It means this market is shifting, and buyers and sellers who stay flexible and well-informed are the ones who are likely to stand out and come out ahead. So yes, the game is shifting. Just know that the right info and the right plan, you're not stuck. You're just getting started. So are tariffs impacting real estate? 100%, 1,000%. We're already seeing this in the numbers. Higher construction costs, builders tapping the brakes on projects, and mortgage rates increasing. And here in Texas, especially in high growth areas like Austin and the surrounding suburbs, it's hitting faster than most people expected. Here's the truth. It's not a bad time to make a move. It just means that the game is different now, and you've got to be a little bit more strategic in how you move. Whether you're thinking about relocating, selling your place, or buying a home for the first time, the most important thing for you to do is to stay informed and get advice that's actually rooted in what's happening right now, not just on the national level, but what's happening locally. I'm keeping a close eye on this every single day. And if you're feeling unsure about your next step, don't stress. You don't have to figure this out alone. I'd love to help you think through your options and make a plan that works for your life and your goals. Looking to make a move to another state? I've got you covered. I have agent partners across the country that I can connect you with that will help you navigate this market. Did you find this video helpful? Then hit that like button. And if you're feeling my vibe, don't forget to subscribe and hit that bell so that you don't miss a thing. And I'll see y'all on the next one.